Hey guys, it's Will here. I'm going to go through the markets and I'm going to talk about one thing that might help you in your trading when you have a big move up and then a pullback. So I'll show you that in a second. So normally what I do is I look at the markets and I've been talking. I talk at a high level of each market, just kind of what it looks, how it looks, and I've been talking about the negativity in the recent market action. So that is continuing here. We can see the NASDAQ is down 1.8% today. We just opened up the market about 25 minutes ago. But what we saw here was this pullback here, and you see the MACD, the declining momentum. And then we broke below the 50. And then what happens is you get people buying, and they push it up again. But a lot of times it'll bounce off of the 50 or some 21 moving average. So now we can see that we're heading down again. And so this decline, MACD, just keeps going down. So even though you might see like an up candle, thinking, okay, now we're going to head back up. If you look down here, that can help you sometimes avoid getting right back in because of the negative momentum that we have. And if we look at the S&P 500, we had this big drop, comes back up right off the 50, and then now we're going down again. So people start thinking, okay, we're coming back. And that might happen, but right now it bounced off that resistance and the momentum is still in a downward direction. This one, like I mentioned in the previous videos, has been in this consolidation, bouncing back and forth. Not very decisive in any way, so I've basically been avoiding this. When you have a long consolidation, you probably want to see it break up above this resistance here, because it hasn't been able to do that. And the Dow Jones as well, it came back up and then it bounced right off of the 50. So this could be another down leg, and now we've got a lower high. And same with the NASDAQ, is that we have a high here. So if you want to get TC2000, there's a link in the description below. It's got these drawing tools, so I'll put sometimes like a high here, and then now we have this lower high. So you can do these little drawings here. And I've got this tab with the market in currency. So you can get a free trial or $25 off a subscription. I've got the gold plan and the real-time data for US stocks. And so, when the markets aren't looking great, it's not an opportune time to be buying, to go along at least. There are some ETFs that are still optional, options to get into, but so the reason that the tech, let's say in particular, went down was, if you look at the US 10-year yield, it's 1.5. So you can see how everybody was freaking out here for a while, came back down, and now it's been going up again. So when interest rates go up, that affects the tech stocks in terms of their present value, discounted cash flow. So with a higher rate, you get lower present value. So the interest rates, and that'll help banks. And things like that, potentially, unless we have, unless we have a big crash, that'll affect everything. But interest rates going up can help, certain things. So, if we look at right now the sector ETFs, there's nothing too great. There's a US dollar has been doing pretty well. So one thing you can do is look at inverse ETFs. So if we go to, it depends, like there's 2x and 3x leveraged ETFs, but you'll see there's a lot of bear funds. If you go to TC1000, you type in bear, you'll get some market bears. You've got oil energy bear, which is not, you got technology, bear, 3X. So let's go to Tech S. So you can see that it's starting to pull up, but it's not definitive, but we have an increase in momentum, but it doesn't last like it hasn't been lasting. There's an SQQQ. So if you want to short without, actually shorting, you can buy inverse ETFs. In Canada, I've got a few in my personal, so I've got a personal watch list here, which is a nice feature of TC2000. So inverse ETFs, so you have like inverse NASDAQ. These are Horizon ETFs, Horizons. Ideally, I'd want to see, like when I buy stocks, the 21's above the 50, the 50's above the 200. So, because these things don't always last, they're still in quite a downtrend. But, and then you have inverse cannabis, because cannabis hasn't been doing great. So this has been, a good uptrend, even though we're just breaking above the 200. But, and then you have in Canada, the TSX. So it's starting to look like we have a potential to reverse here. But, we'll see what happens. And then, like in safety plays, utilities aren't doing great. Let's just see here. I'm going to sort by the symbols. If we go to if we go to gold, this has gone down as well. So sometimes, when there's a sell-off, I'm not saying like there's a major sell-off right now, but like it's starting to look bad. Everything goes down in crypto as well. So we have this 1.89 now, 1.9 on the NASDAQ, 1.39%. So those are pretty bad. We're down below the 50. So you can see here we had higher lows. And then, so this is kind of a previous low. And we reached that point. So that'll be one critical spot that if that breaks, then, you go to the next one. So I actually wanted to talk about something else, which might be helpful when you have a sort of a parabolic move. I'm going to move over to cryptocurrency, but it works with, let me just go to the crypto. Let's look at Bitcoin. So what happens is we have this huge run up, and if you missed it or whatever, or you're in it and it comes back down, you start to see these pullback, recoveries here. And when we're down here, and you start to see this rise, you're thinking, okay, we're coming back again. It's very soon after the huge run up. So you had this massive run up. So you want to try to make sure you're getting in on these big run ups. And what happens is you have the 50 above the 200, the 21 EMA above the 50. And a lot of times the price is above the 21 as well. You get these pullbacks to the 50. That's the kind of the ideal scenario if you're looking for opportunities. And then all through here, below the 50, you do get this run up here, and that is a bit of early entry because like you're below the 200-day moving average. And once it curls back, the 50-day moving up again. But a lot of times people are trying to buy on the other side. Like this is kind of like a mountain. I see it. When you're on the other side, you're kind of hoping it's going to come back again. But a lot of times it takes quite some time to recover. So it takes time. Let's see if I can go to ARK, invest, something like that. Let me just pull back. So yeah, you had this big run up and it comes down, and maybe when you see this bounce, you're starting to get excited. Another bounce, even this bounce here, it was probably a good chance to get in. But you have to look at where you're going to sell. Like if you get in right when it gets above the 50, we never really broke below the 50. Now we're starting to break below. So we had a few chances here. And so that's not looking great. So when, like I said, tech sells off, high growth stocks, Bitcoin will probably sell off during these when the interest rates go up. You know, a lot of the leverage, high leverage stuff, or if the market in general goes down, a lot of the high risk talk, you know, tech stocks type thing, high leverage will sell off because people need money. And and then eventually things will change. Like, you know, you might have gold going up and things, but that doesn't happen like initially. You have that initial drop in everything. So anyway, right now, you know, it's not looking great. So just keep an eye on this. And if you do get, like, sometimes you might say if it's above the 50, I'm going to buy. So it goes down, you sell, it goes back up, you buy. But a lot of times it does stay up there once it breaks down. Like, say if you said you're going to sell when it gets below the 50, you sold here somewhere, and then you just buy back in, and then you ride that right up until here. So you can get chopped out a lot of sometimes, but you know, basically you have to have some sort of rule, because other people will buy dips. Like when it comes down here, they buy. It's a little tricky because it could just keep dropping like crazy. So a lot of times it works when they're in a good market, but and obviously you need money to be, if you're not fully invested or you're making money, and you can put more money in the market. But I don't really like that methodology, because you know, you don't know how far down it's going to go. So as things drop, you might sell a certain amount at 50 and maybe more at 200, so you don't completely get out. But you can always buy right back in. So it's just a small commission. And so anyway, I just wanted to mention that, you know, on these, after a high run in terms of, you know, like I said, with ARK, this is a huge, like, you might have been excited after this big run up to get back in, and you can see how long we're taking here to start to move up again. So, all right, we'll talk to you in the next video, guys.